Okay, welcome to Coffee with Marcus and Mark. In this show, we talk about what's happening in the markets and how we're trading them. Today is Friday, September 30th. Now, stocks slid yesterday, erasing all of the gains from Wednesday. The Dow is on track for its worst month of the year. Apple gets hammered with a downgrade. We'll also look at Nike. And the Fed's favorite measure of inflation came out today. We're going to look at what this means and what the numbers are and much more. Plus, I'll show you two trades that we placed when the sky was falling yesterday. As you can see, there's a lot to talk about, so let's get started. Now, if this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. I'm flying solo today, but on most days, Markus Heitkoetter, Rockwell's founder, is with me, and we show you how we trade these crazy markets. He's actually on his way to Grand Cayman, where we're going to spend 2 weeks with our mastermind members at a nice resort, talking trading and doing some live trading together. So he's on his way, and that's why I'm flying solo today. But I wanted to make sure that we were able to do this video because we know that we want to support the viewers that continue to support our channel and keep watching the videos. We love you, and if you like it, give it a like. Now, you can say we have a ton of trading experience. We know our stuff, and we're not afraid to tell it like it is. If you're looking for some honest insight in the world of trading, you are in the right place. Now, before we take a look at our trades, what we traded yesterday, let's take a look at these crazy markets. Let me share my screen here, get right into this, and I have the S&P 500 up. You can see here that the S&P holding up around June lows. So these were the previous lows of the year. We had a little rally going into mid-August. We've pulled back, given up all of those gains, but we seem to be holding up around 3,600. However, yesterday stocks did finish lower. That was the seventh time out of the last 8 trading days where the S&P was lower. We actually made new lows for the year yesterday. The S&P is looking at finishing September right now around 7.5% lower. Now, we could go to the Dow, and of course, it really depends on where we end up today, but last trading day of the month, last trading day of the quarter, and the Dow down about 7.2% for the month. Let's see where it's at exactly here. Yeah, 7.3% even. This would be the worst month of the year. For the S&P, actually, it would be the worst month since June 2020 if these losses hold up, and if we don't make a whole lot of ground today. The Dow definitely looking at finishing lower and being finishing with its worst month of the year. Now, the S&P also on a 3-quarter losing streak based on things wrapping up today. This would be the only time we've had a losing streak. Well, let me rephrase that. This would be the third 3-quarter losing streak, the only 3-quarter losing streak since 2009. So that was a while ago. I was trading in 2009 too, but it's been a while. So some nasty markets in September. September is historically a rough month, and the tradition continues, and it looks like we're going to finish lower. Although markets are up a little bit today, positive for the session so far, with the NASDAQ leading the way up 0.9%. Now, it's a little bit interesting because today traders were definitely focused on the PCE price index. This is a report and data that shows what inflation is doing. And this was actually a report that came in worse than expected. So inflation was higher than expected. Now, the core PCE price index, let me go over here to PowerX Optimizer and bring up the economic calendar. There we go. So the core, it's Friday. The core PCE price index in at 0.6%. Now, the forecast was 0.5%. So coming in a tick higher than expected. This differs from core CPI in that it only measures goods and services targeted towards and consumed by individuals. On a annual basis, this was up 4.9% according to the Commerce Department. Now, this is based on August data. So it's the end of September, and we still have a whole month of new data to digest. But This number coming in a little bit higher than expected. That's not necessarily good news for the Fed and inflation. And we could go over to the Fed funds futures tool and see where we're at here. And a 50 basis point hike is now showing a 41.9% probability. The 3/4 basis point hike is still in the lead with a 58.1% probability. Now, these numbers didn't change a whole lot with the PCE price index, and we still have a lot of data to digest between now and 33 days from now when the Fed has their next policy meeting and statement making a decision on interest rates. So a lot that could go on between now and then, not having a huge impact, although ticking higher. And we could see that if we look at the E-mini futures and go to a 5-minute chart, we could see how the markets reacted. A little volatility here when that report was released, and we did drift lower as the markets opened. So we did make some lows there, but bouncing back, not a huge significant move to that data. But that was the big one for the week. And right now it seems like traders are kind of shaking it off. We are trading higher with the S&P up now 0.5%, the NASDAQ up 1%. Now, a few market movers. Let's look at Nike here. Nike reported earnings, and Nike just getting crushed, down 10.5%, opening up over 11% lower to start the day. Now, this was the worst day so far since 2001 for Nike. They reported a 44% increase in inventories in its last quarter and said it would offer more discounts heading into the holiday season. So we went from a scenario where we couldn't get inventory, right? Companies couldn't get inventory. Now there is an increase in inventory because there's a little bit of catch up based on what they ordered previously, and potentially, sales not matching up with that because of inflation. And now they have excess supply, and they're trying to liquidate that with discounts into the holiday season. We'll see if that helps them out next quarter. But at least for now, traders not liking that news. They did report better than expected profit and revenue, but it was that excess inventory and how they're going to handle it that traders really seem to not like, and now down about 10%. So trading at 85.48, just a nasty day for Nike. We could go back and see the last time we were trading at these levels was right after this COVID dip, right? So during the middle of the pandemic, it was down as much as about, it got down to just around $60 a share. But now at 85, that's where we were trading back in May of 2020. So nowhere near the 180 that it got up to last November. A nasty day for Nike. Let's look at Apple too, because Apple, such a big company, and you could almost look at Apple as a benchmark for the U.S. economy, how things are doing. Actually, Apple outperforming compared to the S&P. But Apple yesterday down after a downgrade, down 4.9%. So one of the worst days for the year for Apple. Not its worst day, but one of the worst days. Today, it looks like traders are buying a little bit, really just flat, opened a little bit lower, dipped a little bit below yesterday's low, but now positive for the session at 142.90, about 1/3% higher. So muted move today in Apple. Oh, I'm tongue-tied. Blah, blah, blah. I need to, well, I'll sip my vanilla Coke coffee. Today's session is sponsored by Vanilla Coke. No, it's not. And I don't even know why I drink these. Sorry about that. Nothing like a little Coke and coffee. All right, let's take a look at PowerX Optimizer, and let's look at some trades. I mean, yesterday when things were going crazy, Markus and we did take 2 trades. I love the trade that I took, and Markus should be liking the trade that he placed. So let's run over to PowerX Optimizer. I'll first look at Marriott here. MAR is the ticker symbol. And Marriott right now, Looks like the 136 strike for next Friday's expiration is available. The 137, 138, depending on what strike you like best and what premium you're looking for. But I really like this trade. This was not a trade I placed. This was a trade Marcus took. We see that there's some support right around 133, maybe 135-ish, even going back a little bit later. This was a trade that I took earlier this year, back in June. I got assigned at 152.50, pulled back a little bit, and then we rallied. I was able to collect some nice premium, get called away on my Marriott shares. So I am not in this, but I thought this was a great trade, opening up a little bit lower this morning, but now Marriott up 2.4% for the session. So this one's looking great for Marcus. I do believe he took the 133 strike that was available yesterday. What I did trade instead was PSX, Philip 66, and with Philip 66, I took the 74 put. So the 74 put right here, I just love this chart, and we see that it's had some nice ranges this year, but you see that there are multiple support levels. We have our support indicator back here, possible support around 78.50, back here, support around 75.35. Even if it gets through that 74 strike and I get assigned, it looks like there's some nice support between 65 and 70 ish. So this really helps me with a trading decision, because if we have these nice ranges, we're moving sideways, the stock's behaving, it's not just in a free fall, it's not going crazy with a parabolic rally. Instead, just trading in these nice ranges with possible support levels. What makes support? It's not this magic number that's absolutely going to hold, but if you look at a chart and every time the stock gets to a certain level, buyers step in. That's a positive for me, right? I believe that there are repeating patterns in the market as a technical trader. And here we see that when the stock drops, buyers step in and it rallies. It drops, buyers step in and it rallies, makes new highs. It drops, buyers step in and it rallies, makes new highs. Buyers step in and it rallies. That's what I like to see. And I love PSX as a trade. Now, the reason why I did not take Marriott is because of the correlation with my current portfolio. So I'm going to go to the asset correlation tool in PowerX Optimizer here. And I have a position in AMD. I have a position in LVS. I have a position now in PSX. I have a position in UAL, and I have a position in Google. Let me go ahead and add Marriott so we can see what this looks like. And we see here that if I look at, let me go to a 1 year period. The light yellow, light orangish, this is a warning, right? When we have a correlation that's above 0.5, the max correlation, a perfect move, like, lockstep together, would be a reading of 1, right? Where the magnitude of the move, same exact move from one stock to another, is 1. A perfect inverse correlation is -1. So no correlation is 0.0, and 0.5 is when it starts to show some correlation, something to be mindful of. And if I look at my portfolio, the correlation between Google and AMD is high. And that was something that I recognized and I was aware of. And it was a conscious decision that I made. I just felt at that level with Google and my overall portfolio, it was okay to have something that had a slightly higher correlation. Now, when I look at Marriott, though, if I was to add Marriott to the mix, we see that it's slightly correlated to AMD for some reason. It's slightly correlated to LVS. Okay, that kind of makes sense. And it's highly correlated to UAL. So this makes this correlation, and just really kind of across the board, Marriott tends to move very similar, not perfectly, but very similar to some of the positions I'm in. Now, if I look at PSX, PSX has a very, very low correlation to the other positions in my portfolio. So that's why I liked Marriott. I have traded it this year, but because of the correlation and using the tool, I decided that PSX was a better fit for my portfolio. And we see here that there's a lot of green, right? So this is what I like to see. We see we're a little aggressive on the Google AMD, but again, that was a decision I did decide on. I would be very careful adding more at this level, and that's why I decided to go with PSX over Marriott. So just a little tutorial there on asset correlation. Now, if we go back to the wheel, I also want to look at another stock a trader asked me about, and that was HES. So let's look at HES. And HES, a very, very nice chart here. Earlier, I think we had the 98 strike popping up, maybe the 99 or 100. Now it's the 101. This one, nice chart, nice movement. I like it similar to PSX, right? This is where, as a trader, I like to do a little bit of a deeper dive. And one of the nice things about using the scanner is we could quickly filter out stocks, and you have thousands of stocks with weekly options, and we could break it down, narrow it down to a small list of stocks that we want to focus on, and then we could take it a step further when we have stocks that are correlated, right? Because HES and PSX, they're both oil and gas, so they're going to move together, very similar. The correlation tool would show that for us. But here, when I'm comparing the two, I could click on this icon to check the fundamentals. And if I look at HES, we see a PE ratio of 22.93. So it's okay, but mid-range, a dividend yield of 1.39%. That's okay. They're paying a dividend. That's what I like to see in this market environment, a company that's paying its shareholders with profits. And then if we look at the income statement, the quarterly income, they had a negative quarterly income June 2021. It started to go positive. So this looks pretty solid with it increasing. But then if I go to annual, we see that annual's all over the place. I don't know what led to these big swings, but a big loss net income wise in 2017, negative in 2018, negative in 2019, negative in 2020, and then turning positive in 2021. So they're doing pretty well in the last 5 quarters, but for the last 5 years, this doesn't look too hot. Now compare this to PSX, where with PSX, 6.87 PE ratio. That's a very low PE ratio. So Phillips beats HES hands down looking at a PE ratio. Also a real solid dividend yield, 4.87%. So I'm not going to base the trade purely on the dividend yield, but in this case, better PE ratio with PSX, better dividend yield. And now if I look down at these numbers, if I go to quarterly first, positive net income. They have a small profit margins based on their revenue, but positive net income the last 5 quarters. And then if I look at annually, they were positive for the year, the last 5 years, except for 2020. Well, in 2020, during the pandemic, oil and gas stocks did have a rough time with the price of oil futures actually turning negative. So I'm not worried about this negative net income on 2020, but we're positive 4 out of 5 years. So this is where, yes, I want to make a decision on where I would sell a strike based on the chart, based on support, based on the stock's behavior. And here it's a decent candidate. But when I'm comparing the fundamentals between PSX and HES, PSX wins hands down. So I hope this helps. We'll see what happens here. I am in the trade. I sold the 74 put. Right now it's trading at 80.83, and we'll see where it ends up. This is going to expire next Friday. So that's going to do it for today's stock market update. Coffee with Mark, not necessarily with Marcus today, but we'll be back here together on Monday from the island of Grand Cayman. Beautiful place, beautiful resort. Looking forward to it. And Marcus and I will be together live with our Coffee with Marcus and Mark on Monday. So until then, have a great weekend, have a great trading day, and happy trading, everybody.